In this video, I'm going to work through the example that we would have gone through in class where we put together a multi-step income statement, and we need to know how to account for each item, whether it's part of operating expenses, non-operating items, or other. The company that we have here is Balenciaga. Balenciaga designs, manufactures, and sells high-end shoes, the ones that look like socks, for pets. You know the song I'm talking about, right? You know what this is a take on.
I like those Balenciagas, the ones that look like socks. I like going to the Tula. I put rocks all in my watch.
All right, enough Cardi B for now. Let's get to work. All accounts that we see here, there are some accounts from the trial balance. All accounts have normal balances. Prepare a multi-step income statement from this information, including earnings per share. So we're going to need to take this information here, but as I scroll through this, I quickly notice not everything goes onto the income statement, right? There are some accounts here, one that clearly does sales revenue, goes on the income statement, but does everything go on the income statement? Marketing expenses, and be ready for me to be calling on you. I want to make sure you're paying close attention in case I call on you. I want you to be able to answer this. Marketing expenses, does that go on the income statement or the balance sheet? Well, that clearly is the income statement. Accumulated depreciation on office equipment, is that income statement, balance sheet, or somewhere else? That is not the income statement, that is the balance sheet. How about common stock? Is that going to go in the income statement or the balance sheet or somewhere else? It's going to be on the balance sheet. Rent revenue, income statement. Unearned service revenue. Remember, that's the tricky one. It says revenue in its account title, but it's not actually a revenue account. It is actually a balance sheet account, a liability account. Cost of goods sold, that's an expense on the income statement. Dividend revenue, that's a revenue item for the income statement. Sales commissions, another way of saying this would be sales commissions expense. This is our expense associated with giving our salespeople commissions in hopes that they're going to really push and sell our products. Interest expense, income statement. How about allowance for doubtful accounts? Does that go on the income statement? Well, it relates to bad debts expense, but allowance for doubtful accounts is a balance sheet account. Remember, it's the contra asset that says this is the portion of our receivables we expect we'll never collect. Loss due to flood damage, because of that word loss, that means it's going to go in the income statement. Furniture and equipment, long-term assets on the balance sheet. Delivery expense, it's an expense on the income statement. Write-off of inventory due to obsolescence. A write-off is a journal entry in which we take down the value of an asset. So we can consider a write-off a type of a loss entry, and losses are reported on the income statement. Insurance expense, we know that's the income statement. Gain on the sale of investments. If we see a gain or a loss, that will be on the income statement. And finally, depreciation expense on office equipment. We know that that's on the income statement. All right, let's start our income statement preparation. We know sales revenue goes at the top. If the company had any sales returns, allowances, or discounts, that would be shown here in the next item, and then we would report a subtotal for net sales. But since the company doesn't have any of that, I'm going to continue down with my income statement. A multi-step income statement has multiple subtotals, and it shows the expenses as they relate to operations or not to operations if it's a non-operating item. So what relates most closely with sales revenue? Which expense relates most closely with sales revenue? Every time we sell a good, we incur the cost of producing or buying that finished good. So I'm going to have sales revenue less cost of goods sold. And the subtotal for sales revenue less cost of goods sold is called gross profit. I'm going to put the calculation for gross profit here in column G. We'll see why a bit later. Of course, it doesn't matter what column you put the information in. All that matters is that we account for everything appropriately. Okay, below gross profit, I'm going to have a header for the operating expenses. And just like we did before exam 1, we're going to separate our operating expenses into two different types. Selling expenses, and then somewhere down below, I'm going to have my general and administrative expenses. I may have to move the location of this header So right now what I want to do is identify which of the expenses that we have here in this selected trial balance, which expenses are considered selling expenses. How about marketing expenses? Are those considered selling expenses? Absolutely. Let's put that in. Okay, I know I'm not going to need anything on the balance sheet here. Rent revenue. Well, notice I didn't include that with sales revenue. There's a reason for that. If this is a company that designs, manufactures, and sells high-end shoes for pets, renting out for facilities acting as a landlord is not related to the primary operations. So I'm holding off on that for the non-operating section. Okay, cost of goods sold I've already used. Dividend revenue is like rent revenue. We'll get to that later. How about sales commissions? Would that be considered a selling expense? It sure would. So let's put that in here. I'm not going to use that. Okay, interest expense, that is not an operating expense. Remember, interest expense is a cost of financing a business. So we need to hold off on that. I don't want any balance sheet items to show up here. Losses, that's going to be in the non-operating section. How about delivery expense? This is the cost a company incurs when it ships the merchandise to the customers and it pays for the shipping. So if you order a pair of jeans from J.Crew and use a promo code for free ship and you get free shipping, it doesn't mean it's free to you and free to J.Crew, right? Somebody has to pay the cost of that shipping. If it's free to you, then that's a delivery expense for the seller. Sometimes delivery expense is called freight out. And if you're wondering if this video is just about over, I'm a freight nut. I'll leave a pause here so you can continue laughing. And then let's plug this in. This is a cost associated with selling our items. We're picking up the shipping cost. Therefore, it's a selling expense. Okay, those are our only selling expenses in this example. So here I'm going to have to move up my header I'm going to put in my total selling expenses and put this total here. Shift this up. Next, I have my general and administrative expenses heading. So which of these expenses that we see here are classified as general and administrative? So they're operating expenses not relating specifically to manufacturing or selling our goods. Stuff that goes on the costs of everything that happens in that corporate office. Okay, so what do we have here? Skipping down, interest expense we said is non-operating, loss due to flood damage, non-operating, write-off, non-operating, insurance expense, that is general administrative. Let's put that in. Gain on sale of investments. No, that would be non-operating. How about depreciation expense on office equipment? Absolutely. Let's put this in. Okay, let's put in a subtotal for total general and administrative expenses. And then finally, let's put in a subtotal for total operating expenses. And what are total operating expenses? That should be a really easy question. It's the sum of my general administrative expenses plus the total selling expenses. Okay, so we have gross profit of $550,000, total operating expenses of $336,000. The next subtotal I want to report is total operating income. This is sometimes called income from operations. And it's also especially in the field of finance or in the news, you might hear the term EBIT, or earnings before interest and taxes. I don't think I've ever seen earnings before interest and taxes written here in a company's an SEC 10K, but oftentimes we talk about operating income in the term earnings before interest and taxes. And so what would the company's earnings before interest and taxes be? That should be an easy question. Gross profit minus operating expenses. Another way of looking at this would be to say, if I wanted to check my number, I can say, well, it's my sales revenue minus cost of goods sold, minus marketing expenses, sales commissions, delivery expense, insurance expense, and depreciation expense. And I get the same number. So I know everything's accounted for properly. Now we are up to the non-operating section. I'm going to start with a header that says other revenues and gains. So remember, this is going to be that we've started the non-operating section here. This is stuff that revenues, gains, expenses, and losses that do not relate directly to the company's main operations or are unusual and infrequent items. Okay, other revenues and gains. And one type of other revenue is this rent revenue we have here. Another type of other revenue is dividend revenue. This is not what the company is in the business of doing. It's not an investment bank. Okay. I know this is non-operating. I know this is non-operating, and this item here, these items are going to go onto the other expenses and losses section, but for now I have one more item to put under the other revenues and gains. Do you see what that item is? Gain on sale of investments. Okay, so I'm going to put my subtotal. I'm trying to follow what the homework does here. They don't have a separate subtotal for other revenues and gains. They just put the total on the side of the last item in other revenues and gains. Our next header is other expenses and losses. The only other expense is interest expense, not just in this problem, ever. Everything else is really considered a loss. Okay, so I've used this. I think there's a few things I never checked off here. Now I have just these last two items here. The loss due to flood damage is an other loss. That's an infrequent and unusual item. Hopefully aren't too many floods, and if there are, we shouldn't be losing so much. We should be insuring more and therefore having insurance expense as part of operations rather than frequently seeing loss due to flood damage. Finally, we have the write-off of inventory due to obsolescence. Obsolescence means it's outdated, and we're probably not going to sell it for even what the cost we incurred to purchase the inventory or to make the inventory. Okay, here's my subtotal for total other expenses and losses. The next total that I have here is going to be called income before taxes. And what is income before taxes? It's equal to operating income adjusted for the other revenues and gains and other expenses and losses. So we need to think about what do we need to add and what do we need to subtract. To my operating income, I need to add other revenues and gains and then subtract other expenses and losses. So income before taxes is $141,000. Now notice that there's no line here for income tax expense. We have to figure out what income tax expense would be. We need to have the income tax rate, and I see that here in line 29, income is taxed at a rate of 25%. So income tax expense, and sometimes this is known as provision for taxes, is equal to 25% of what? 25% of pre-tax income, or income before taxes. So income tax expense is $35,250. And finally, we have net income equal to what? Income before taxes less income tax expense. So net income is $105,750. Now, the last item that we see is has to do with the company's capital structure, how much stock, equity portion they have, their equity portion of capital structure. The company had the following stock outstanding all year: 4% cumulative preferred stock, 100 par, 6,000 shares, and common stock, no par value, 50,000 shares. We're going to use this to show the last item on an income statement. The last line will always be earnings per share. And remember from the video what earnings per share is. Earnings per share is equal to net income minus preferred dividends. And we take this whole field, this is the numerator, we take that whole field and divide it by the number of shares of common stock outstanding. It's the investor's way of saying, what's my piece of the company's performance this period? All right, so we need to use the information here to figure out, we know what net income is, it's 105,750. Preferred dividends, what are preferred dividends? So I know the company has preferred stock, so they may or may not have preferred dividends. If the company has no preferred stock, that means no preferred dividends. But here they do. So what are the preferred dividends? This is how we solve for preferred dividends. Preferred dividends is equal to the par value for of the preferred stock multiplied by the number of shares of preferred stock times the dividend rate. So what is the dividend rate? That's this 4%. It never says 4% dividend rate. That 4% just means that's the dividend rate. What does cumulative mean? Well, the word cumulative that we see here is not relevant to our calculation of dividends. What cumulative means is if the company didn't have enough cash to give dividends to those preferred stockholders, they have to go back and pay whatever was missed earlier. So that's not relevant to us now. It's just kind of the way some types of preferred stock are stated. So the preferred dividends are calculated in this example as $100 par times 6,000 shares times a dividend rate of 4%. Okay, so what does that mean? 100 times 6,000 times 0.04. That means preferred dividends are 24,000, and this is a dollar amount. Go. And it's not showing me. Well, we know that this is dollars. How about that? That works out well. All right, so what is my earnings per share? It is equal to, I need parentheses here, net income minus preferred dividends of 24,000. Take that numerator and divide it by the number of shares of common stock outstanding. So notice there's total of 56,000 shares of stock, total stock outstanding. We're not dividing it by 56,000. We want to divide by the shares of common stock. And earnings per share, rounded to the nearest penny, which it always is $1.64. Hope you enjoyed this video. We will continue on with the income statement in our next class.